Hey guys, welcome to my channel. My name is Brad, and today I want to talk about how to invest your first $1,000. And this is the best tip I've ever heard for beginning investors. It's from Mohnish Pabrai, who's essentially my investment mentor. He puts out, guest lectures on YouTube probably about 3 times a year, and the information in those is just fabulous. And this tip, I pulled from this 2012 lecture that Mohnish Pabrai did at Ivy Business School. I highly recommend you watch the entire lecture. I wanted to play a clip here, but I was getting feedback. It was weird sound, and so I couldn't figure out how to make it work. But I'm going to pull a few of the nuggets from this lecture and share them with you in this video. So, how do you invest your first $1,000? The first thing we really need to do is come up with a list of stocks to consider investing in. Okay. Another thing to do is just buy an index fund, buy the S&P 500, and you're going to get the market average in terms of your returns, which is something around 10% over the last 30 years. My personal approach is to pick individual stocks and create my own kind of basket of companies that makes up my portfolio. And in this video, I'm going to talk about how to do that approach. Now, the cool thing about investing is that fund managers in the US that are managing over $100 million have to reveal what they're buying and selling every quarter, every 3 months. And the tip that Mohnish Pabrai gives is that he's a shameless cloner. Okay, he's a copycat. Now, there's something in the human psyche that makes it difficult for a lot of people to copy great ideas. Okay, but if you can transcend that in the world of investing, it gives you a huge advantage because it's actually quite difficult. There's a lot involved when it comes to evaluating a business, evaluating an investment opportunity. So when when you're able to see what these top managers are buying, you know where they're putting their money. You know that they've already done a lot of work. They've analyzed that business and they like that business. So, if you have a list of 40 companies that these top investors have bought in the last, say, 6 months, and you only select companies that you're investing in from that list, you just get your error rate drops dramatically, as opposed to if you were to go out and just pick companies yourself in the stock market. So that's, I think, probably the best tip I've ever heard for new investors in the stock market is to start with a list of companies that top investors have bought recently. And the cool thing is you don't need to pay anything to see what these top investors have bought recently. There's a website here called Aroma, okay? And what Aroma does is it aggregates the recent transactions and current holdings of all of these super investors, okay? So, say Charlie Munger, you can see what daily journal, which is managed by Charlie Munger, owns. And if they've bought or sold anything recently, it'll show up here in recent activity. Now, Charlie he buys and sells very infrequently, but you can see what he owns here. You can see the percentage of the portfolio. So this is kind of the conviction that Charlie has in terms of this bet. But let's try to find one where there's some activity in the recent quarter. Jeffrey Ubben at Value Act Capital. So you can see here, a fairly concentrated portfolio, meaning his top couple holdings make up a significant portion of the portfolio. Nearly 22%. It's a pretty heavy, big position. And you can see he sold off a little bit of that in the last quarter. You can see here he bought FedEx, which was a new buy. He never owned that, or at least he didn't own it prior to the last quarter. So all of these 590,000 shares were bought in the last quarter. So it's a really awesome resource. And then if, say, you don't have a particular investor that you want to copy, you can come over here, and this kind of aggregates all of the activity from all of these super investors in the last quarter and the last 6 months. And you can start digging into, these individual companies to see if, any of them are attractive to you. I want to mention there was a study done between 1976 and 2006 where these two university professors, they decided to, calculate, okay, how would an investor have done if they had just copied Warren Buffett between 1976 and 2006? Meaning, whenever a buy showed up on these 13F filings, you bought at the end of that month. And then whenever it was, publicly known that Buffett sold out of that position, as revealed in the 13F or here through data Aroma, you sold out of the position. So you just copy Buffett for 30 years. And they found you would have had a 20% annual return as compared to, I think it was around 11% during that period for the S&P 500. So we know that copying can work. And actually in this video of Mohnish Pabrai that you should really watch if you have time, it's fantastic. He actually recommends to one of the students, you can start your own fund that just copies these professional investors. And if you do it well, if you do it smart, you'll beat the index. And you'll get very rich very quickly. So, it's a fabulous tip. One that there's actually a lot of professional investors that do this. They look at what other top investors are buying, but there's not a lot of beginning investors that are following this hack, quote unquote. And it's really a shame. It's a fabulous way to kind of protect your downside, reduce your risk of losing money, and also dramatically increase your risk or your chances of doing better than the index over time. It's really called, Mohnish Pabrai calls it bowling with bumpers, right? So, when you're bowling, you always have a chance of getting a gutter ball, of striking out. That's very true with picking stocks as well. There are a lot of ways for public companies to get into trouble, to go bankrupt. Capitalism is brutal. It's a dog fight out there. And so when you do this, when you only buy what other super investors have bought recently, you're effectively bowling with bumpers. You're dramatically reducing your risk of buying these lemmings, buying the lemons, I should say, buying the duds, okay? So some things to look for in these managers if you want to clone them. It's really helpful to understand their investment process. Managers who have a concentrated portfolio are going to be easier to clone because you can really see what their high conviction bets are. When someone like Mohnish Pabrai buys something in the last quarter with 20% of his portfolio, it's a high conviction bet. If you have someone like Warren Buffett who, maybe buys into something and it makes up 1% of the portfolio because he has so many companies in the portfolio, that's not as high of a conviction bet. So you're looking for managers who follow, big bets, infrequent bets, and not very many bets. Okay, concentrated portfolio. Mohnish Pabrai is fabulous for that. I always look at his 13F when it's released every quarter. You want to make sure they have 15 to 20 years of history. because you can get tricked into thinking that a manager is generating really high returns if they haven't been through a bear market yet, if they haven't been through a market crash and they're using leverage. Okay. Now, when you use leverage, say you're generating 10% returns with no leverage, so you're not borrowing any money for those 10% returns. But if you now borrow money, if you leverage those investments, you can get a 20% return as long as the market continues to go up, right? But when the market goes down, if you're leveraged, you're going to get slaughtered, okay? So it's important to look at track record of investors through probably a couple crashes. So like if I'm looking back, I want to include 2008, and I also probably want to include the tech bubble. So, a little more than 20 years would be ideal if you're looking at a track record of performance for some of these super investors that you might want to clone. So that's more of that's a clonable approach. If you have a concentrated portfolio, if you understand their process. The cool thing about Mohnish Pabrai is he really talks about his process in his lectures with these business schools every year. So it's, if you watch enough of them, you can kind of wrap your head around his investing strategy, and then it makes you that much more effective if you want to clone that strategy, because kind of how he's thinking about different companies, what his target returns are, all of that kind of stuff. So yeah, that's my biggest tip, guys. If you want to figure out how to invest your first $1,000, if you're just getting into the game, I would recommend one, ideally you do it in a Roth IRA, a Roth individual retirement account, because then you save a lot of money on taxes and you can compound your wealth that much faster. And I have a Roth IRA through TD Ameritrade. My taxable account is through Robinhood. So you can, just download Robinhood, link your bank account, put $1,000 in, and you're off to the races. You kind of dig into some of these companies that super investors have bought recently. A couple of these I'm looking at now, top 10 most owned stocks. Google's a little expensive for me right now. Facebook is more attractive than Google, in my opinion. Microsoft's pretty expensive. I think Berkshire is definitely worth looking at. But another thing you can do, guys, just for a quick and dirty assessment, is look at what the price to earnings ratio is right now, and look at what the average is over the last 5 years. And you can get some sense of how cheap it is with respect to what it's been priced at in the recent past. That's kind of a quick and dirty way. I think that's all I want to say, guys. Let me know if this is helpful, and which of these super investors you're excited to really dig into and clone. So I know this has been super helpful for me to really use this as a starting list and go from there. It's made me a lot more comfortable that I'm not kind of swinging at these long shots that have a high probability of actually losing me money. So if you like this video, guys, hit that thumbs up button, hit the subscribe button as well so you can see more videos like this. And I'll see you guys in the next video. Take care.